Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world. And today we're diving into a report that is as straightforward as it gets, but might have some interesting takeaways, especially for income-focused investors. We are looking at Hancock Park Corporate Income Incorporated and their latest filing from the 19th of September 2025. They've given us an update on their net asset value per share, which is a fancy way of saying what each share of the company is worth based on its underlying assets minus its liabilities. Before we jump in, if you are enjoying these deep dives into company filings, make sure you hit that subscribe button and join our growing community. And if you want to chat with us and other finance enthusiasts, our Discord link is down in the description. Now let's get to it. So what is the big news here? Well, the core of this report tells us that on the 19th of September 2025, Hancock Park Corporate Income Incorporated calculated its net asset value per share to be $9.32. That is the key number from this filing. Now, this is indeed a massive financial statement detailing every single revenue stream or expense. It is more of a focused update on the company S value to its shareholders. This type of report usually comes out when there is a specific event or a regular update that needs to be shared with the public. And in this case, it is all about the value of the company S shares based on what it owns and owes. Think of it like this. If the company were to sell off everything it owns and pay off all its debts, this is what would theoretically be left for each share owner. The date here is important. The 19th of September 2025. This filing is current and reflects the company S status at that specific point in time. The company itself is incorporated in Maryland, and its main business seems to be in corporate income, which suggests it invests in or provides financing for other businesses. Interestingly, Hancock Park Corporate Income Incorporated has checked the box indicating it is an emerging growth company. This means it is a relatively newer player in the public markets and is allowed certain accommodations in financial reporting. For example, they have elected not to use the extended transition period for complying with new or revised financing. Our accounting standards, this shows a proactive approach to adopting newer accounting rules. Now, what does a net asset value of $9.32 per share tell us without a prior period or a full financial breakdown? It is hard to say if this is good or bad. We need to compare this number to previous reports or industry benchmarks to truly understand the story. We need to see how this $9.32 compares to what it was last month or last year. Has it gone up or down? What is driving that change for Hancock Park Corporate Income Incorporated? This number is crucial. It directly impacts investor confidence. If the net asset value per share is steadily increasing, it suggests the company is growing its wealth and is a good investment. If it is decreasing, investors might start to worry about the company S underlying holdings and its ability to generate returns. Since this filing is quite brief and focuses solely on the net asset value per share, we can surmise that the company S strategy likely revolves around managing its portfolio of income generating assets carefully to maintain and hopefully grow this net asset value for its shareholders. What is a bit unusual is the lack of any detailed financial tables or comparative data within this specific report. Typically an 8K filing would accompany more comprehensive information, or at least reference it. However, this filing serves a purpose by flagging a specific important figure as of a certain date. Let S think about the income part of their name, Hancock Park Corporate Income Incorporated. For a company like this, its success hinges on the performance of the companies it invests in or lends to. If those companies are doing well, paying their debts and yielding income, then Hancock Park Corporate Income should see its net asset value grow. If those underlying companies struggle, then Hancock Park Corporate Income will feel that impact directly. So my take on this single number, $9.32 per S hair, well, it is a snapshot, and without context it is hard to make a definitive judgment. However, for a company focused on corporate income, its fundamental health is tied to the creditworthiness and profitability of its borrowers or investees. If this value is trending upwards, it is a positive sign, but we really need more data to understand the full picture. Are they taking on too much risk to achieve this value? Or is this a sustainable growth path? We need to keep an eye on future filings to see the trend and understand the composition of their assets. What kind of corporate income are they deriving? Is it from stable long-term investments or more lateral sources? Without that information, this $9.32 is just a single data point. Alright, that is our quick look at Hancock Park Corporate Income Incorporated S latest update. What do you think of this net asset value figure? Does it make you curious for more information? Let us know in the comments below if you found this breakdown helpful. Give us a thumbs up and subscribe for more corporate insights. Don't forget to join our Discord community for further discussions. Thanks for watching, and I'll see you in the next episode.